Tonight we're witnessing a seismic shift in the global economy, one that could redefine the balance of power for years to come. The world is watching as the financial landscape transforms before our eyes, and the implications are profound. The US dollar's dominance, long considered unshakable, is now being seriously challenged by China's yuan. This isn't just a matter of numbers or headlines, it's a fundamental change in how global trade and finance operate. For decades, the dollar was the world's financial anchor, the currency that nations trusted for stability and security. It was the backbone of international trade, investment, and reserves. But in spring 2025, the American economy shrank, sending shockwaves through markets. Meanwhile, China boldly shifted over $725 billion of its trade into the yuan, signaling a new era in global finance and a direct challenge to the old order. This isn't just a headline, it's a turning point with real consequences for Americans. Your savings, the prices you pay at the store, and the stability of the financial system we all rely on are now in flux. Everyday life could feel the impact in ways we're only beginning to understand. China's move wasn't sudden or accidental. For years, it has quietly built alternative financial systems, forged new alliances, and invested in infrastructure, all while waiting for the right moment to act. Now, that moment has arrived. With the US economy vulnerable, China's strategy is accelerating. The global chessboard is shifting rapidly, and every nation is rethinking its next move. The stakes have never been higher. The world is no longer dominated by a single currency. We're entering a new chapter, one that will affect not just governments and corporations but individuals everywhere. Understanding these changes is crucial for everyone. Staying informed is the first step to navigating the challenges ahead. The future is uncertain, but knowledge will be your best ally as the world's financial order evolves. Let's look at the numbers. The global economy is at a crossroads, and the data tells a story of shifting fortunes and rising uncertainty. In early 2025, the US economy contracted for the first time in years, sending shockwaves through financial markets and raising alarms among policymakers and investors alike. This downturn sparked fears of stagflation, a rare and troubling mix of stagnant growth and rising prices. Meanwhile, on the other side of the world, China's cross-border transactions in yuan soared to a record $725 billion in a single month, accounting for over half of its international trade for the first time ever. The contrast is stark. As the US slows down, China accelerates its push to internationalize the yuan, reshaping the global financial landscape and challenging the status quo. Every trade settled in yuan chips away at the dollar's global power, making the financial world more multipolar. The balance of influence is shifting, and each transaction signals a step toward a new era. Investors noticed. As uncertainty grew, foreign investors pulled $63 billion from US equities, signaling a loss of confidence in American markets and a search for stability elsewhere. Global money is searching for new safe havens, and China is positioning the yuan to be one of them. The world's largest investors are now weighing their options, looking beyond traditional strongholds. The dollar's dominance is no longer guaranteed. Its role as the world's reserve currency is being tested as never before, and the outcome remains uncertain. The world's financial center of gravity is shifting, perhaps permanently, toward the east as new powers rise and old certainties fade away. What triggered this shift? Many point to US tariffs in early 2025, aimed at protecting American industries. Instead, these tariffs disrupted global supply chains and made trading in dollars riskier and more expensive. China seized the opportunity, offering the yuan as a stable alternative, especially to countries hit by US policies. The tariffs, meant to show American strength, may have accelerated the move away from the dollar. Analysts say the US handed China a compelling case for de-dollarization. By encouraging trade in yuan, China shields itself from US sanctions and gains leverage. In trying to isolate rivals, the US may have motivated them to build new systems that exclude America. It's a classic case of unintended consequences. China's surge in yuan usage is no accident, it's a coordinated strategy. In April 2025, Beijing ordered state banks to stop buying US dollars and prioritize the yuan for cross-border payments. China is building its own financial infrastructure, like the CIPS system, to rival SWIFT and bypass US oversight. The Belt and Road Initiative now mandates yuan use, embedding the currency in global trade and digital commerce. China isn't just copying the old system, it's innovating, integrating blockchain and digital currencies for faster, cheaper payments. This multi-pronged approach is embedding the yuan at the heart of a new financial order. The goal: make the world less dependent on the dollar. The financial landscape is being rewritten. What does this mean for you and your everyday life? Let's break it down. If the world relies less on the dollar, your purchasing power could shrink, making each dollar in your wallet stretch less than before. A weaker dollar means imports, from electronics to food and even clothing, get more expensive, fueling inflation and making everyday essentials harder to afford for many families. The Federal Reserve might raise interest rates to try to control inflation, making borrowing costlier for things like mortgages, car loans, and credit cards, which can slow down the economy and impact local businesses. Your savings could lose value if the dollar buys less globally, affecting your ability to plan for the future or save for big goals. American jobs could be at risk, especially in industries that depend on global trade or foreign investment. As Wall Street's dominance fades, the U.S. could lose some of its economic influence and stability. Global supply chains may shift away from the U.S., impacting everything from jobs to the price and availability of goods. This isn't a time for panic, but for awareness, preparation, and smart choices. The U.S. must adapt by investing in innovation, modern infrastructure, and strong international relationships through smart diplomacy. Understanding these shifts is the first step to protecting your finances and your family's future. The next is supporting policies and leaders who prioritize economic resilience and long-term stability. By staying informed and engaged, you can help secure America's economic future and your own.